Okay, I think I finally figured it out. What happens is we have to go live on Facebook first. Then, when we go live on Facebook, Instagram says, okay, we'll take you too. So that's the trick because I kept hitting the button and nothing would happen. And then I finally figured it out. Okay, good to know. People, Facebook and Instagram are the worst when it comes to helping you out in your technical aspects. They just are. Facebook, I'm sorry, but you put me on hold for a week, and it's just unacceptable. Anyway, I'm not going to cry anymore. Good to see you, Anastasia. How are you today?
I'm fantastic, Stuart. It's exciting Tuesday. Never dull in our real estate markets, right? Never a dull
Never.
moment in our Sold to Sand webinar series.
Welcome, everyone. My name is Stuart Fournier. I'm a 25-year veteran of the real estate world here in Los Angeles and specifically the beach areas. And one program note before we get started, because we do have a great subject today. We're going to have a story, and then I'm going to let Anastasia figure it out for us. And it has to do with a client that I had that had a real struggle with her interest rate in what was promised to her. Now, for those of
Mhm.
you that have gone through the transaction process and at the very end of the process, when you're just about to sign your escrow papers, get the keys to your house, and you look at the loan specifically with regard to the interest rate you were guaranteed you were going to pay, sometimes people have a problem with that. We're going to get into that, and I'm going to tell a little story. So, for those of you that have ever been frustrated with that situation, we're going to address that. Uh, we're going to dissect that for you today. But before I get started, I wanted to make sure that you all know that you can join the conversation by hitting the comment section, and we'll bring your question on air. And we're going to spend the next 10 or 15 minutes talking about this. Now, it's interesting, Anastasia, I don't know if you've known this, but ever since this unfortunate tragedy last week with a political figure, there's been a real
Mhm.
focus on people talking about what podcasting really is. And that is that it's not a
Mm.
30-second, it's not a 60-second presentation of the world, right? It's really a thoughtful, and in the case of some podcasts, go on for an hour, hour and a half. So we're
Yeah.
not going to be on for an hour and a half. We're not going to be on for that long a time. We're going to be on for about 10 or 15 minutes now. But if you're going to get some really good information that we just can't package in a 60-second Instagram post. So with that in mind, please let your friends and family and everyone know that we're here every Tuesday at 11 a.m. and we get into some real subjects that are very educational and we hope you benefit from. We know you'll benefit from. So you
Yeah.
ready?
It's a good
Okay.
point. It's a good point, Stuart. I agree. It's hard to explain something thoroughly in 10 seconds. I mean, we're obviously want to be thorough in the way that we elaborate the different topics that we discuss as it relates to real estate. I'm Anastasia Bonholzer. I am Stuart's co-host. I am a mortgage broker with AMS Mortgage Services, and we are happy to be here together with you. And so let's dive right in.
Okay. So again, let me create this scenario once again. When this happens to, I would say, I want to say 60 to 70% of our buyers. Admittedly, at the end of escrow, there are so many things that happen that it's very
Mhm.
hard for a consumer. It's unfortunately, it's just the way our business is set up to understand the intricacies of absolutely everything that's happening in the paperwork that they've been given. It's literally thousands of pages. And the
Mhm.
loan, of course, is a big part of that. And many times what happens is we have clients at the end say, you know, I was taking a look at the interest rate and I agreed to pay 6.75%. But when I'm looking at the facts here, it really is maybe a quarter percent higher or a tenth of a percent
Mhm.
higher. And I didn't see that happening, and I really don't know what to do about it. And I'm kind of miffed. It kind of
Mhm.
upsets me. I see that happen a lot. And of course, as a realtor, it's not really our bailiwick. We're not loan officers. We don't know the intricacies. We do the best we can to refer the best people, like my wonderful co-host here, who have no problem explaining these kinds of things. So I'm going to tell you a little story, quick story about a client that we had recently, and Anastasia is going to tear it apart for me. And she's doing this with no rehearsal. So I want to show you
I
how
love it.
skillful she really is.
I'm confident I can handle this challenge.
Okay. So here's what happened. At the 11th hour, we got a call from her loan company, and her loan company said to her, we have a little bit of a
Which
problem. And
was
the
not
problem
me, just to
was
clarify. I
not
just
you,
want to
was
make
not
sure
you.
that's not me.
Right,
Okay.
right. And the client found out that the loan she was promised for well over 2 weeks uh, was not going to be the loan that she was getting in terms of the interest rate. And the problem was she was told that when the loan was going to be resold, and I'll let Anastasia get into what that actually means for you. When the loan was going to be resold, the people that eventually were going to take the loan, with the client having no choice about that, were not going to take the loan. And so therefore they refused it. They then had to shop the loan again. The original purveyors of the loan had to then find another loan uh, broker, but that broker wanted a higher percentage. Now we're
Mhm.
1 to 1.5 week out, 1 to 1.5 weeks out from the close of escrow. But the interest rate increase and what she was promised for well over 2 to 3 weeks wasn't happening, and she was very upset about it, and in my opinion, deservedly so. She was promised one thing and not given another. So my question is, Anastasia, how does a customer guarantee that they are going to get what they thought they were going to get? And there's no question about it. What can they do at the end of the transaction to make
Mhm.
everyone accountable for that situation?
Okay. I like the challenge. So in this case, I imagine the loan officer you were working with was a mortgage broker. And I think this situation is lack of transparency. The mortgage broker at the onset of the transaction did not elaborate that we do have the ability to work with multiple lenders. That is basically multiple banks that will inherit your loan. The sale of it is somewhat irrelevant. It's who's going to approve you for your situation, and perhaps maybe due to income. I don't, since I don't know the loan facts, I don't know why the original lender chosen by this broker
Actually,
basically
actually,
denied the loan,
I'm
right?
sorry. Let me. There is an important fact I missed here. This had
Okay.
nothing to do with the client. What happened was this particular reseller or buyer, I don't know what you call them, uh, said that there was a problem on title. So again, having nothing to
Okay.
do with my
Yeah,
client
which is
whatsoever.
which is not the qualifications of, yes. So that's still a component of the loan process. It may not be the financials of the actual individual trying to buy this property. It may not be anything to do with income. It could be a very well highly qualified client with 800 FICO, $600,000 in the bank with
wh-
$600,000
which was
W
pretty
salary.
close, right? Which was
Yeah,
pretty
so
close to what this
so there
situation
are
was.
times if it's an issue with title, perhaps whoever's buying the property, there's issues with title, and so that's things that we cannot control as mortgage professionals, and so it's possible that the qualifications. What happens? Well, how do we shop for the best product for our clients? Usually, we go to see who is the cheapest out there. Typically, whoever's the cheapest has the most stringent guidelines. So they are more conservative in their approach with certain topics. And there are certain overlays depending on the lender. So in this case, it's plausible to imagine that this client wanted the cheapest rate and continued to tell that at nuisance to the loan officer. The loan officer, through the discovery process, because the title work is not immediately available to us. Usually it's 1 to 2 week process. We get the title write up, we send it to the lender. And if there's any portion of however the title is, maybe the title is not clean, maybe there's outstanding liens. I don't know. I've never had that situation personally, but at that point, the loan officer should have been transparent with the client in letting them know that there's issues with this house, with the title, and
So
we now have to
let's
move the loan to another lender. And
okay.
the
So
interest rate there is not transferable.
correct. Okay. So let's
Yeah,
get into the weeds on this one a little bit. Okay. I'm a
yeah.
customer. I don't know this process at all that you've discussed,
Mhm.
right? I understand what you're saying about transparency with the loan officer, and to some degree, I think she was very transparent. But I think what
Okay.
happens is there's a disconnect between the people that are going to take the loan and the loan officer. And frankly, As a
Hmm.
customer, I don't want to know anything about that. I don't want to know that struggle. All I'm thinking about is, hey, you promised one thing and I'm getting another. All this other stuff is not something, that I want to be involved in, that I want to be
Right.
a
The
party
nitty
to.
bit, yeah. Then the specifics of the loan process, I don't go that specific to the client unless they ask for it. But in this case, since there are issues that were discovered, that loan officer should have said, "We chose a lender. You wanted customer. You wanted a price," and that's what initially, before even all of this comes to mind, is the client has a choice to choose. I usually tell the way I operate is I say, okay, I understand that you want the lowest rate, but know that the lowest rate does come with some risks. So that way you're prepping the client in advance to say, okay, we're going to lock your
Okay.
loan with XYZ lender. They're very strict in the way that they operate. There's certain things they like, there's certain things they don't like. If certain issues come up, we're going to have to move the loan to another lender. The lock, the interest rate is not transferable. We're going to have to relock whatever the price is with the new lender at the time that we have to relock. So those are
Okay. So,
things, though, it does have to do with communicating upfront the expectations for the client. I cannot guarantee that the loan is going to get approved. We do our very best to assure them that it's going to be fine, that these are the steps we have to follow, but we cannot guarantee conditions of the property. I cannot guarantee that the appraisal is going to come in and it's going to be perfect. That's something outside
right.
of my direct control.
Okay.
But what I
So let
can do is, tell the client the expectations.
Okay, so let's talk about what actually a lock means, because I
Hmm.
think that people have a misunderstanding of that, and maybe I do as well. So
Yeah.
let me pretend I'm a client. To me, when you as a loan officer say we have a lock, to me that
Hmm.
means it's over. That's my interest rate. And when I go to sign paperwork at escrow, that's the number I'm going to see. Is that the situation when you say lock?
So a lock, there's when a client comes to me and we're under contract, I always explicitly tell them, you have a choice. This is the interest rate that I can offer you today at this time, because interest rates move hourly, daily, depending on what data comes in from an economic perspective. I give the clients the choice. We can lock the loan. This would be the cost. This would be your payment. This is it. Once we lock it, it's not movable unless we change lenders, right?
Okay.
We can then
So,
also
so it,
float.
so,
Floating is another term meaning we're not, if we predict data coming out in the next few days or in the next few weeks, which will make the interest rates lower, then I advise, as a professional, I say, perhaps it's to your advantage to float, to try to get in at a lower rate. But it all has
interesting.
to do, it's in the hands of the consumer. I give them the choice. Do you want to float? Do you want to lock? These are your
Right.
choices. And the customer at that point makes the decision to,
Okay.
keep that rate or not.
So let's assume the customer says, yes, I want to lock it.
Yes.
Is that the figure that they'll see on their paperwork at the end of escrow?
Yes, if they're closing with the same lender, because the lock
Okay.
will carry through. But if there's issues that come up in the loan process, and that's the advantage of working with a broker. If you work with a bank, once they deny the loan because of that title issue, that's a dead
Right.
fish. They
Right.
cannot move you anywhere. That is their
Exactly.
only package is that. So with a
Right.
lender, yes, there are instances, but the opposite could have happened. Can you imagine if they would have relocked and now suddenly she's got a 1/4% cheaper and she's actually happier? So
Right.
yes,
Right.
those are the risks that you take. But if the client wanted the home, if they were properly advised, I think that's.
Right.
I really think maybe communication, even though you say that it was there, the client still was confused because when they were
Right.
at the closing table and they were expecting 6.5% and suddenly it's 7%, that loan
Right.
officer should have advised the client that, hey, with the new lender, the interest rate's higher. We can
Well,
actually cancel this transaction altogether, or we can continue to go forward with it.
right. And I want to give I'm real big on making sure that everybody understands the truth about things. And in this case, I want to give credence to the loan officer and the client because, again, this is a situation where the loan officer did advise the client that they were going to they were going to have to go higher if she wanted the property. So there was no
Mhm.
miscommunication about that.
Okay.
But on and as far but you know, it was a very difficult position for the client to be in nonetheless, because she wanted the house, period.
Mhm, mhm.
So I just want to make sure everyone knows the facts. We don't
Yeah, yeah.
sugarcoat here on this show.
No, no,
We
no,
we
not at
tell the truth
all. Not at all.
because
So it sounds like the client
it
should have
doesn't
not been
benefit.
unhappy then if they were already
Right,
advised that the interest rate was higher. So the lock
right.
is not transferable then. I think that's the main point is once we lock with a specific company, we cannot now take that lock and go and do and transfer it to
Right,
another bank. Each
right. I
bank
get
has
that.
to relock the loan at the time that we submit the loan. We cannot just say, "Hey, I like the rates from a month ago. How about I go back there in time and get the rates
That's the
from
other
back
side of the
then?"
coin, right? I do
Yeah.
understand that. So what I'd like to do is end the show today and talk about, as a realtor, what we've seen work the best. And this advice that I'm about to give you applies to not just the loan transaction, not just the loan process, but also our process, all the process that we have during the 30 days of escrow. And the basic and mostly responsible message is this: please do your paperwork. Read the stuff that you get in the mail. It is exhausting to read. It is difficult to read. We do our best as professionals to help you read through some of it, but we cannot have you hold your hand through all of it, because then we get into legal interpretations, which is not our job at all. And you need to consult your attorneys and anything for anything legal. We do our best to explain to the best of our ability. We know what our limitations are. But the bottom line is doing your paperwork as soon as possible and as soon as you get it will prevent situations like this. Most of the
Mhm.
heartache that I see, quite frankly, and you don't want to lecture your clients at the end of a process by which they know they didn't do their paperwork on time.
Yeah.
It doesn't go
It's
well
so true.
from a marketing
Because
perspective.
DocuSign, unfortunately,
Right,
we make clients
right,
DocuSign, and DocuSign automatically takes you to the signature page. We don't even,
exactly.
with our eyes closed, we're just signing away unknowingly what we're signing. At least
Right.
when you're with the notary, they physically have to go page by page, so you actually know. Hopefully, you'll
Ex-
know what you're signing at that point because
exactly.
you're reviewing it.
Great
I do
point.
have a question in the audience. Individual ask if you're locked the interest rate, how much can it go down in order to relock at a lower rate? So that's a good question too. Is if the market today is 6%, and if in and I lock the rate, and in 2 weeks something drastic happens, like I don't know, more bad data as it comes to the job numbers, which is possible. Can we relock with the same lender potentially at a lower rate? Yes, there are some lenders that offer relock policies. It has to be pretty drastic. It has to be usually more than 0.5%, if not 1 full% lower, which is unlikely in the short term of 2 weeks. But
Right.
what we do offer is the ability to actually cancel the loan with that lender and move it somewhere else, which I've done in the past. We do have a track record. The lenders don't like it when we do that because they do the work. Then suddenly we kind of yank the rug from under them and move it to some other lender. They do keep track of how many times you do it. But I don't do that often just because the
Yeah.
interest rates have been pretty steady over the last 2 years. But it is an
Yeah.
option. I always tell my clients if we lock today, you at least secure the pricing of today. If in 2 weeks
Right.
the pricing is significantly better, and what I mean, usually it's 0.5%. Usually that's the ballpark.
Right. That
Because
makes
any less
sense.
than that, financially, it just doesn't make sense because then we're scrambling to make sure we finish on time.
Right, right. Okay, we're at 19 minutes. We know you've learned something. I wasn't going to say, I hope you've learned something. We know you've learned something on this show. Anyway, we'll see you next time, 11 o'clock. Every Tuesday, we're here to discuss anything about real estate. And we'll see you next Tuesday, everyone, on Sand to Soul. Bye.
Sounds good, everyone. And then if you have a loan that you've locked, please send me your loan estimate. I will review it for you complimentary and let you
Very
know
good.
if you're getting locked at a good deal or not. Because I think we can
Fantastic.
all use that. All right, bye, everyone.
Fantastic. Bye bye.